Welcome back, guys, to another video of this $100 challenge. This week, can we finally get funded, or at least move out of stage 1 onto phase 2? We're about to find out. But before we get started, this week, not only you'll see the typical reversal, but I'll introduce you and showcase the momentum trade. How it works, how to spot it, and how to trade it. So if you want to find out more about this, or see if we finally get funded, let's go. All right, guys, we're back on the charts. What we talked about, Monday morning momentum, the savage Monday morning momentum. So obviously, you know that it's one of my rules, never go against the momentum on Monday morning, since opening to at least the midday on Monday. You could ask me, why don't you use the momentum on Monday morning? Momentum on Monday morning is not a guaranteed thing, okay? You don't always get Monday morning momentum. But when we do get it, we know that it's not wise to go against because it tends to be blasted. So it's not that I can use it because I don't always know, or I don't often know when we're going to have such momentum. And to utilize this information to enter a trade, I'm missing something. However, when I do get this momentum and I see it and it's too late for me to trade, it's not too late to not go against. And that's a profitable information in a way because it saves me more trouble than it brings me a profit. And you know, avoiding losses, avoiding trouble on the market is winning. And that's what you need to get. Okay. You could lose one good position, two good position against such momentum and not have, for example, if we trade prop firm the way we do, not have enough margin left to go with the third that is the best one. So for example, here, I was looking at the level here to use. But for me, in order to go with that big wicks, the reason I wanted to go with level, you can see some historical values. Okay, so there's a couple of reasons. It's actually something we can debate there. All right. So here you have the level, and we do have another one here. So which one is better? Which one is worse? It's always something I ask. Which key level are better? For me, both of them are good. Okay, both of them are good. If you're looking in terms of momentum, in terms of the trade for momentum, the second one is better. Why the second one is better? Because the second one is where the price tapped into and managed to break lower. Okay, so it carries more momentum. So if you had a retest there to carry on with the momentum, that's the kind of level I would want. However, we've generated that momentum, now we're retracing, so it's not about that momentum anymore. So I'm looking at the side of the rejection there. And it shows me that there was quite a good rejection here. It's about $14 rejection, so it's quite significant. Usually anything above $10 tend to be giving you something, a response. So what it does to me, this kind of key level, it leaves a print. It's like a print. I want to show you there. These level, if you were to highlight all of those $10 plus wicks, and I encourage you, I invite you to do this kind of work, which is something we can briefly touch upon. How do you develop a strategy? How do you come up with rules and how, for example, you want to start focusing on key level, and key level is a big part, but you want to know which key level, how to differentiate key level. Well, you can start with, for example, key level that are generated from wicks. So wicks like that. You can size them up. $5, $10, $10 plus, 15 plus, whatever. And you look at all of them, like for an extensive period of time. 100 days, 100 days plus, whatever, 100 candle, whatever is good enough for you. And you make a statistic from this typical kind of level. I know from my data that rejection that are $10 plus on H1 on gold, they do tend to give me a reaction. So for me, my focus when I'm not looking for momentum because I've just explained why this one is better for momentum. I'm just looking for a reaction because we are seeing the upside. Then I'll be looking at this one. Moreover, if you look at the difference between the two, it's only $12, and $12 is bang on a target for me. So the distance between the two is not good enough. Okay, so the main reason for me, I did not pick that level, which is the level that gave the perfect reaction, is I'm going with the furthest trade potential. Okay, I'm looking for the most exhausted to give me the reaction. And with that pullback and that week we had, I thought this was going to be the one. So in my book, the rules was, and I'll show you what the chart. I'm just gonna drop the chart shell. So this is what I'm looking at. Okay, so I'm looking at this level there to be breach. So I want the momentum from all of this to breach me to get exhausted and tap into this one. Unfortunately for me, this was the level that was good enough that make the reaction, and that kills my exhaustion there. And for me, invalidate my trade. So my trade was of interest around 4,100, which is the big psychological level there, guys, which had potential, okay, which frankly is a good trade, but it's a daily trade. It's not an H1 trade. And a daily trade carries a lot more possible drawdown. For a reaction, we don't know. So we are already in the week, we don't know how much momentum. So if you're looking at size of the push there, and we're looking at potential 23, if we got a lot of momentum, 23, and it can pick up again. Okay? So you have to judge what the risk to reward potential is. And for a daily play like this, you have to cover a lot. And I don't like these when they are clearly against the trend for the prop, because I can't manage the drawdown the way I want. I can't allow 1% more, 2% more drawdown because I'm not flexible. I don't make the rules. So I'm going to stick with one that have a higher order of success. But for me, the higher order of success was if we had a clean bridge of this level after such a move, we would get exhausted there. And 60 pips would be enough to cover it and get my reaction. We didn't get the reaction there. We didn't get the bridge, sorry. We got the reaction, so it kills what I'm looking for. It kills my profit-taking exhaustion potential, and therefore invalidate my play. So for now, what I'm going to look at for gold is if we are going to go even higher up, or if we're going to retrace. If we are going to retrace, there's a couple of areas. Next possible level will be obviously this, because we are having strong momentum to the downside over $25. So this would be a nice touch if we look at couple of ways to do the fib here. We can do from the opening. Okay, so the opening is there. The price from the opening gives you that. But for me, it's the last impulse there. So we are currently on the 23. If we breach the 23 and reach this level there, I think it's a possible trade. It's not too far from the psychological level 75 here. So we've got ourselves a trade potential here, right there. Okay, which I will enter if we get it, which seems that we could be getting this trade very shortly. I'm gonna monitor that very closely. Alternatively, we're gonna wait the 50 area, which is rather tricky there because of the size of the wick. So on this specific case, it's a matter of going with the safest again entry, which could lead minimal drawdown. So for me, we've got a tiny wick there, we've got this wick there. It's the psychological level. So I wouldn't count this. I would just go with the 40, 50 round number. Okay, so here we are looking at 72. Get it? It's just to limit the drawdown. It's going to be $20 push, 25 plus. So it'd be nice to get it. Alternatively, awaiting lower for 50. 61, it's got the wick there. It's very weak. So this is the kind of play I'll show you with the chart there. That's going to be more simple. This is what I'm looking at in terms of plays. And it looks like we're going to miss out the 72. But I'm looking at this, okay? I'm looking at getting the 61 only if we have a breach of this level, okay? Otherwise, I'm looking for 50. If we get a bounce from 50, forget about 61, forget about the small wick. I would then refocus and regroup on this wick there, which has all of these level here. Okay, guys? So this is what I'm be looking at. So we'll see if we get onto this trade. But if we follow the logic here, we should get a reaction. Hopefully we get to enter lower. Just need to tag a bit lower. Because we should get another push up. It's following the bullish Monday session. So US session has made a new high, or will make a new high, actually. And if we do so, we should see more uptrend on the Asian. It's the typical Asian bullish pattern. So we see that I'll edit with, and we see if we get in the trade, which I will come back in on the video or update later on what happens, guys. All right, guys, so we're back on the charts, and sadly we missed out on the 72. Okay, I could have jumped earlier. This is something I usually do because we reacted from the 75 psychological level, which I use tremendously on gold daily. However, when it's okay for me to enter like the first confluence I meet on daily, because I tolerate a lot more drawdown. We play by very different rules, or I play by very different rules when it comes to H1. H1 has got such a small, limited amount of drawdown that I allow, especially when we do tie that with prop firm. Everything got strict, so we got a bit strict with the plan. Despite this being a good trade, despite, as I was saying yesterday, to have this potential to have more upside because it's following the typical bullish Asian pattern. When you get a Monday bullish session and make a new high on US, you tend to have continuation of this, and this is what we've seen here, continuation of the trade throughout Asian until 3-4 a.m. where usually top Asian. Anyway, it's missed. We're not gonna dwell on it. We're gonna be very respectful of the plan. As I said, we only have in this current market 60 pips to play with. This is the way I do, and this is how I get my 2 risk to reward. Okay, so couldn't quite justify utilizing half of it to under early, and if I had like $3 more below my level, I would be tapped out, and this trade would be even more infuriating than missing out. So we missed out. That's just the way it is. If you're looking at the potential next play here, obviously we got a lot of possible retest coming here. That's got potential. This can have some potential. Don't discard this level. I'm just going to show you quickly where silver is at. Silver. So we're here. So what we are seeing here, we haven't yet seen it, but we could be seeing silver slightly ahead, but it's not diverged yet. Okay, so we don't have my negative divergence. Okay, so just a reminder on negative divergence, guy. This is what I'm looking at. I'm looking at silver to break the high that we currently have in a similar fashion here. Why? Because we start from the similar price action. So we've got a bull move here. Go back there. So we got the similar bull move here. Okay. So this bull move there explain why we can tie up and look for a divergence. They both had an impulse at the same time on the opening of the market. And if I look at silver here, we have exactly the same movement. So we have them in sync. So the minute they unsync, we can look for that potential negative divergence. So this is something I play a lot with. So what is my intent? My intention would be to set this. This is not a break, and it's an area. Those levels obviously aren't just flat spot price. So what I'm looking at, we can see the trend, we can see the momentum there, and what I'm looking at for is some sort of triangle formation or range formation and the break. I'm looking for the break on silver, and I'm looking for the break on silver to be slightly ahead of gold. Okay, gold already had a reaction lower, already forming this triangle shape. So if we were to get the break on silver, and this is lagging behind, I'm gonna look for a possible trade. Why? Because if you're looking at this perspective, we only have to cover the low here. Okay, this is the low. So we cover that, and then the potential is quite tremendous. So what we're gonna have to do, we're gonna have to dig back price action and see what comes next. So I'm gonna highlight what comes next, what comes next here. We've got this week there, okay? These two, and I'm not playing with these because we passed them and our new reference is this high there. So this is not much, you can see, you're there, it's barely 1.4, but where the potential is, what do you see after? Yeah. After we saw massive move to the downside, and we've got a call. Okay, so this, yes, we can tap into that break retest here. Of course, you could pay attention to all those little wicks, even if it's quite messy in my opinion. I like this one because it ties up with a small wick there. I don't usually use much of these unless they tie up with something. Then after that, we've got the level here. Okay, so we are quite far ahead, but if I take already the next one, you can see how I can drastically improve my remove those risk reward. And look, the risk reward goes to almost 3. So potential. And that is, if I get an entry there, I could get an entry lower. I could get something like we make the break, we make the retest, and the retest, I don't need to cover more than this one. Therefore, my risk to reward could be drastically reduced even more, but increase, I mean. So this is the play I'm looking at. Otherwise, all other potential will be, if we come back here with a clean move, but I need more price action, okay? We are in need of more price action. The next buy level obviously would be that break retest, because that's not sufficient for a break retest. And then of course we got the wick there and so on, but we're quite far away. Look, we are almost $70. So we're gonna monitor this and see if first we get a continuation. And if you do get continuation, the additional thing that would play in my favor, which is not really technical, is what I've just mentioned. The London make a high, US make a new high, Asian is likely to push again and make a new high. So if you are quite far away from the high from US, so if US make a high here and we are there, that high is higher than the London one, okay, here. So technically, Asian's gonna make a new high. So we know that technically we're gonna make at least this. So the further down we are, the more potential we have also for this trade. And this is what I'm looking at next. The break retest did not work for us. I mean, it did work overall there, but it didn't work for us. Unfortunately, it tagged us out before reversing. That's the game. We can't win them all. Sadly, these play around big psychological level are always kind of messy in terms of how much we need to cover them. you need to account for a bit more, which we can't really do with the potential of F1, so F1. H1. So we got to be strict, as I said, with the plan. So throughout this entire challenge, you will see one thing is how strict one must be with its plan if we fully trust the long-term potential. And I fully trust the long-term potential of H1 risk to reward because I've done it for the full year. I mean, I've run H1 gold charting for the first time using 2RR and 3RR, and the statistics are really, really good. So even though some will miss, even though some will tag you out, on the long run, it pays, so we must be strict. So this was a loss for us, unfortunately, but the idea is good, and the execution was not perfect. This is something that we usually do on the daily, but on the daily, we would have needed to come from the next big 4200, which is not the case, so it was an H1 play. Anyway, what to next? What to next here? You might wonder, why am I long there? And what's the plan here? We've got a nice 2RR with a lot more potential, but that 2RR allow us to complete phase one, and that's the goal. So what is this play all about? I will show you in a minute. So if I look for you if I load for you silver, there we go. So what can we see? This is what I was talking about the divergence, the other type of trade I want to focus on, which are momentum. I'll share with you the execution here that I'm looking at. This is what I'm sharing for the Discord community. So what is this all about? I'll break it down as it's ongoing. You see, we talked earlier in the week that both of these were on trend. They started from the same trend, same price action. The start of the week is bullish momentum, and we were looking for that divergence. So we were initially looking for the divergence around here, thinking we might have the divergence, but no, it did retrace harder, both of them, and it pushed again. Now, this is kind of the new PA price action, but it's still part of the same bull move. If you look at the retracement there, and if you look at the retracement here, you already see a difference. My question is, can you spot the difference between the two? So look at this, pam pam, and this, and look at silver. Up, up. There's a massive difference. If you look at the 11, 3 o'clock, and the 12 in the morning at 4 a.m. And if you look now at the same here, the 11, 3 o'clock, as our reference, look what happened here. You see, compared to silver, I'll log again silver. I'd like you to come up with the logic and the explanation. It's always good when I'm showcasing these negative divergence pattern on all of these. We work a lot on pattern recognition. It's always good to try to find out yourself, visualizing and trying to come up with the reason and the logic. It will get printed a lot better, and you will be able to use it more efficiently rather than being fed it and not really fully understanding it. So that's what I'm trying to do, is trying to break it down so you're understanding as it's happening. So we've made essentially a much higher low on silver. But that's not the whole thing. That's just part of the overstretching. So what is happening here? While if I was to have a fractal map of gold, so if gold was mapped onto this, you would see this. Bam, tuck, tuck, tuck. And we are around it. So what is essentially happening here? We are overstretched. Both are driven fundamentally to the upside. Okay, so we've got a fundamental driver. That's essential. That's number one factor we need to have. Second, They both come from the similar price action, similar event, or that's what we've seen. The week started bullish for both of them. Now they're getting overstretched. And it's because of the data I've accumulated over the years that I know that silver, most of the time, not always, guys, but most of the time, leads the way. Where is it coming from? It could be from the cap. Silver has a much lower cap, which makes it easier to move. It could be various reasons. I don't care. What I know is that the stats tell me that overall, this tends to lead the way. So what we are seeing here is we've seen the high that was made. We've seen that we made a lower high, higher low, sorry, and we breached through and we brought retest. So to me, we have a negative divergence that showcase that silver is actually bullish, show more bullishness and overstretched to gold. So essentially what I'm looking at, I'm looking for gold to catch up on silver. Okay, we have the similar high that we have on silver, but we made a much lower retest, which indicate that possibly gold will gather a lot of momentum and catch up with silver. And I'm looking for the furthest distance, the biggest overstretch possible between the two, which can indicate that gold is about to blow up and create that momentum, and that's what I'm looking at. And for that, I don't need to cover below these low there. So I've got all of this room to protect me in a way, and I know I should never go back all the way down because silver has already broke and retested this area, which indicate to me that gold must at least go there, if not go to the 56 area, 56 being one of the old key level. But you should be breaching past this the same way gold has, silver has. So essentially, this is what I'm looking out for completion of phase one, guys. All right, guys, we are back on the chart, and we have our momentum play that delivered the TP. It delivered a lot more than what we had targeted, a lot more, but we didn't need much. However, I made a bit of a miscalculation, and on the next day, I had to get a quick scalp on NQ to grab that $10-20 that was missing for completion of phase one. But we have completed phase one, and we are now ready to go for phase two. So what has happened on the market and what we are looking at? I've been very, very busy for the week, so I wasn't able to be free relying on my time behind the screen to kickstart phase two properly. The first play I was looking at was the breach there with a bit of momentum that was helped with the negative divergence and silver. I missed out on this break retest there. We had a nice break retest. Obviously, you know the drill. With H1, I'm going with the low confluences. We've got multiple level of reference here. So I picked the last one, and the last one was just the lowest one. Spread or whatever didn't allow me to be tagged in this first possible trade. So that wasn't any trade going for me. Yeah. And then we had the whole crazy momentum to the downside where pretty much everything has been a miss. As you can see here, I was looking for a couple of things, but mainly I was looking at the big retest of this level, the last one of the area. So those two, the first one because it's the most significant, and the second one is an average of all of these, focusing on the lowest and latest. Sorry. So those two were the level I was looking at as per the chart there, and as per the chart, I missed out on both of these because both delivered the pullback just slightly before price action got touched. So not the best start of what I would have wanted for phase two because it's miss, and a bit of struggle with time management. But hopefully, if we keep going, we can see that the ball is moving, so should be able to complete that within a week or so, because it took us barely 2 weeks to complete steadily phase one. Hopes to do the same with phase two. And then we can start really getting the ball rolling, getting the refund, getting another 10K challenge. That way we can keep ourselves busy with funded account, with the challenge ongoing, and then start really farming onto the prop firm accounts and leverage bigger position we will be once we get all of these funded.
That's it, guys. Another week in the bag. I hope you're enjoying the content as always. If you find any of this useful, don't forget to comment, like, and obviously subscribe for more of this. I will see you next week.